Hello and welcome to the Plain English Finance Podcast, the podcast dedicated to helping you make smart financial decisions. I'm your host, Trey Bino, financial planner with TCU Wealth Management and Aviso Wealth. For more information or to send in your questions, check out the show notes at treybino.ca/podcasts. And if you want to learn more about me, start with episodes 1 and 2. Let's get into the 14th episode. 14. Okay, this episode is about budgeting. The last one that we're going to do around the income levels, and this one is where this is kind of a big category. We're just going to do $400,000 of household income and up.
Okay.
So, what do you think changes? Well, let's start with what do you think these type of people look like?
Like
short, tall. Stocky.
Definitely short.
Okay.
Just kidding. I would say probably not what you expect, maybe. I think not that I'm in the industry, but because I know I have kind of an inside scoop sort of thing and worked at a credit union and all that. I've seen clients before and members and stuff, and sometimes you think you know who the wealthy people are by what they look like, but it's not always the case, I guess. So maybe farmers, because they sell when they sell the equipment and stuff, those checks are really big. I remember when I was a teller, those checks were really big. Yeah, I don't know. What do they look like? They wear suits too. I don't know. I'm thinking lawyers, partners. Maybe a partner of a law firm, or someone who owns a business, an entrepreneur who's had a successful business. That's kind of what I would think. Those are coming to the top of my head. Doctor, maybe
Yeah, so the typical people that you're going to see in this category are going to be STEM, sales, owning a business are going to be the big ones. So that's really, I would say, sports people and stuff like that, people that get their money through eyes and attention. So there's two ways that people typically earn money. You either create value through a business or or STEM, them type of topics.
Can you just remind? It's science. Is it? What's STEM against?
Science, technology, engineering, medical.
Okay, engineering. I couldn't remember E.
So it's them type of subjects, or you gain money through eyes, right? So maybe they are a YouTuber, that type of where you get money through eyes. So they're the typical people that you will see in this category. That's really what you would need to do to pursue those categories in order to get into this income level. And there is a gap between, $400,000 to $10 million. I've never worked with anybody that makes $10 million a year. $400,000 is actually a lot more common than you would think. All it really takes is a dual income couple close to mid to late end of their career. And this is very doable. So there's some major things that change in this. And one thing to note, that everything that you had been doing beforehand kind of build you to this point. And part of the major reason why I get people to separate out their expenses from their income is because that is what you have to do if you are once you get to this type of income level. And that's because a lot of your income isn't derived from a salary. It doesn't come in bi-weekly chunks. It is either you get a salary and then a big annual bonus, right, of what your salary is plus, or you'll be given stock options in a company, or it will come by the way of a business. So it's lumpy when you get your your income.
Kind of
yeah, it's not a steady income if you are in any of those fields, because you'll probably be a partner of a firm if you're in professional services. So therefore, if let's say you own an engineering firm, then bigger checks are going to come once or twice a year. They're not these monthly or bi-weekly paychecks.
Right.
So in order for you to not go through these huge ups and downs of spending, guess what? You need to have separated out your income from your expenses, right?
Mm-hmm.
And you can't have your income dictate your expenses. But there is a few key principles in when it comes to this group. The first one is that at this point you can pretty much afford to do everything that the average individual would want to do, but you still can't afford to do it all at once.
I'm seeing a common theme. People are probably like, well, maybe not everybody, but some people might be like $400,000 plus. Like, you must be doing it all. I was like, well, maybe they don't think that. I don't know. I kind of thought that. I was like, that sounds like so much. But yeah.
Yeah, and what you'll find is that as well, you've seen it, like it's not as much as what you think when you're earning it, right? But a lot of people in this group will get to 50 late 50s and be like, where did it go? When you look back through your career, you think, okay, well, I made last 15 years I made $400,000-$500,000 a year, and where is it? And that's a lot to do with lack of planning or things like that. So, but you can, there's lots of things that you could afford to do. One thing I would say, if you take nothing else away and you're in this category, is that throughout society teaches you that you are like your income is very important, right? Like a lot of people measure their self-worth to some type, or maybe self-worth is not the right phrase. That's the measure they use to determine how good they are doing in their finances.
So, like, for success, sort of thing.
Yes, for like financial success is tied to your income.
Okay.
I would say it is really, really important at this stage to shift that to financial success needs to be tied to your net worth, not your income. Your income is very irrelevant, and we'll get into why. But and this is where people that when they get tripped up, when you see the big paychecks going to movie stars and sportsmen, and they end up broke, and you're like, how? The guy was making $2 million a year. How do you end up broke? It's because they tie their spending mindset to their income,
Current income.
not to their net worth.
Yeah.
So a really easy way to understand that is, I'm making $2 million a year. Can I afford a $2 million house? Well, no, you can't unless you're making $2 million a year. You should be able to pay for the house, right? So you can't afford a $2 million house until you can afford a $2 million house. So overall, I would just say that somebody in upper this end, like, millions of dollars a year, instead of thinking that their income can buy whatever they want to buy, I think after their basic living and like a good standard of living, right? Not just the bare minimum, you have the income, you can afford a good standard of living. Shaq, who big Shaq is? Okay, I think he said it great. He said that best advice he ever got was to take his income, take half of it, that's the government's, and then take half of it again, and that's his. And then he said the best people will take half of it again and put that aside and live on what's left during their like NBA career, and that gave him enough to then go out and be able to make more money now because he owns businesses, right? He could funnel it towards that.
It's like these young guys don't realize if you are in sports that your career is you're not working till 50s, 60s. You're working till you're, I don't even know, like 30s, maybe.
Yeah, exactly. And that's a key thing that a lot of people don't. In this, it's such a blessed position, I guess, to be in, but it can all be taken away just by hurting yourself, right? So that's for upper end. The more regular people you see in this type of income, a lot of them at this point are pretty decent with money. I would say a lot of them have had to earn it, and there's a reason that a lot of lottery winners end up broke is when you don't have to earn something, your relationship with it is a little bit weird. Same with people that inherit lots of money that aren't already pretty wealthy. Again, that I've seen that it's their relationship with the money is kind of strange
Yeah.
versus somebody that had to build a business and they worked at this mechanic shop and had to put everything into it, blood, sweat, and tears, went through the ups, went through the downs, and now they're earning a good income from it, right? So that's very different. So I'd say that those people that are in this range, a lot of them have habits built already. They're relatively, they can kind of understand what they can afford. If they've been through the bad times, then they're probably saving a little bit on the side. So they're on a good set, right? Like I think most people get by. Here, though, is where the decision is to whether you want to try to optimize and be as efficient as possible, or if you're willing just to let be, I guess, because it does make a huge, huge difference here.
Okay.
So in this range, the biggest impact to your ability to build wealth, generate wealth, is tax. There is no bigger impact to your life than the tax man.
It's funny because I was thinking when you were starting this episode, the other episodes, you're like, what do you think is different or how for budgeting? And I think both I've said taxes and this one I didn't. And you're like, this is the tax episode.
Yes.
Like, of course. I'm like, they wear a suit. I don't know.
Yeah, no, this is the tax one. This is the one where the taxes add up really, really quickly. And don't get me wrong, I understand taxes. I'm okay with taxes. I believe what I say to clients is I will try to make your life in a way that you'll pay the minimum legal amount of taxes that you owe. If you would like to go after the fact and give them a donation, you go right ahead. But it's not going to be because I didn't do my job. Like it's
like you're going to tell them this is what you have. This is what the government requires of you. You have to pay.
This is the amount that you pay. Why pay more than the government requires you to pay unless you want to? And then outside of your tax return, you go right ahead and do it. But when it comes to how we plan and position your life, we want it to be as efficient as possible when it comes to taxes. And that's where you start looking at things like, okay, should we be leaving money inside of a corporation instead of taking it personally? Should we be starting to think about family trusts? Should we be thinking about estate freezes and putting it into the next generation? We're looking at individual pension plans for professionals and things like that. We're looking at ways to be more efficient. And this is where insurance, like life insurance and things like that, actually have a part. And my goodness, like whole life policies and stuff like that are oversold to the wrong people.
But you're like,
I
maybe
think
here.
Everybody in my industry kind of knows that. There's some sleazy companies out there that sell this, like even like infinite banking type. Anyway, that aside, this is the area.
Thing?
No, this is different.
Oh, different. Okay, sorry.
But this is the area where those type of instruments can actually have a lot of value. We will do later episodes on those, but this is when you start to look at those type of things, and you need to look at how your whole finances is structured. But this episode is about budgeting, so we'll come back to some other stuff. But what do you think changes with their budget?
Well, obviously they're
apart from the numbers going up.
Yeah, the numbers are going up. What changes? They probably don't. I want to say like I'm scared to answer the way you're looking at me. I'm like, oh, I'm gonna say something wrong. Maybe the way they budget for certain things doesn't matter as much. Like I'm thinking like groceries and stuff, like those ones where it's like, yes, that costs a lot for people maybe in the 100 200 whatever $1,000 incomes, because it's like what's it called? I'm sorry, I'm blanking on the name. disposable, like disposable spending or disposable income that you can spend on those things. It's like, I don't know. I'm going on a little tangent here and you're just staring at me and help me out, please.
I would say nothing really changes in the way that they should budget.
Okay. Can somebody please listen to this episode and tell me, was that a trick question? Was he setting me up? Tell me.
I would argue very much so that nothing really changes. Oh, you still need to assign yourself an amount to spend. You still need to, like, yes, you're not going to be worried about the smaller stuff.
Yeah, that's what I was.
But you should still allocate. Just the numbers would be bigger, right?
Yeah.
Like your personal spending would be bigger. The trust fund kid that has $50 billion in his account, I don't think there's any trust fund people with that much money, but you get the point, is still going to allocate an amount or should be allocating an amount to spend. Because if you don't allocate an amount to spend and what your lifestyle is, you don't know where the risks are. So let's say I'm worth $5 million and I'm living on off my investments or whatever, or I have a risky job. Let's say I'm in the oil field. I own a company in the oil field, lots of ups, lots of downs. How much money do I need to keep in cash for a safety net for in case my business folds very quickly or I need to shrink?
Mm-hmm.
Well, if you don't know these numbers, you don't know, which means that you can't allocate everything else appropriately. Your friend comes with you and wants to start a business and buy some property. How much money can you allocate towards that, knowing full well that you need to prioritize the friendship over the money, so you have to go into it willing to lose the money? Or how much can you afford to lose, right? So things like that only come if you still are allocating resources appropriately and you're allocating money to spend. And that's the key thing here, is that nothing really if you do it properly, if you manage cash flow properly, the numbers just get bigger. And as your income goes up, as your income changes, the way that you get income, none of that will impact your personal finances. It might impact the way that you run your business side of things.
Or maybe like the structures that you use, because I was almost going to call you out and be like, so are you saying we did these 3 episodes and really we could have just done one? Because it's like, here's how you budget and it applies to everyone. And you're like, let's split it into 3 episodes. And people are like, oh. Anyways.
Well, there's some small stuff. But
yes.
Yeah.
But
no, you're right.
It's kind of like, it is kind of that way. It's like, here's you love this word, framework. Here's the structure of it. But there are different parts that certain people in this income range would use that others wouldn't. Like you said, like just the planning side, like certain estate things and trusts and all those things. I mean, somebody with a lower income might not be looking into those planning parts.
No, and I would say that where you would be focusing your efforts would be on different sections, right? It's like in the lower income section, you'd probably be focusing on the money going out of like the house account, right? Like a house account. When you get to an upper, as your income goes up, you'd be focusing on money that's going from your like personal spending type range, right? And as you hit these income levels, you should be allocating enough to that you should be covering all of your wants and needs at this point. So then really you should be focusing on everything that's happening outside of your personal finances, because these type of individuals are under a ton of stress, right? You're thinking of their C-suite executives. They are building stuff. They these running a business. They have payroll to meet. They have, their mind needs to be elsewhere in order to maintain this type of income. Imagine you're working with a lawyer that's, you're being sued for something they're defending your company, and then you hear that they're going through bankruptcy themselves.
Yeah.
Where do you think their head is going to be at? Well, it's certainly not going to be on your case defending your patent, right?
Yeah.
Like from a rival company. So when you're in these type of roles, you give a lot to these type of roles, and that means that you need your personal stuff to not be the stressor.
Yeah.
If you are, if I find out my lawyer is struggling with finances, can't put food on the table, is up to his eyeballs in debt, I know that's where his focus is.
Yeah.
It's not going to be on my stuff. I need you to be focusing on my stuff.
Yeah.
Same for the CEO. If the CEO is worried about the guy coming to foreclose on his Porsche sitting outside,
Yeah.
is he focusing on the company, growing the company properly? No,
No.
he's not. So if I'm the board, I'm thinking, get rid of this guy. I'm or girl.
Good save.
It is at these type of jobs, the focus cannot be on your personal finances. It can't be on your credit card debt. So that needs to be done, dusted, and you move on and don't think about it. And the way to do that is with a framework.
Mm-hmm.
But there are some other things that they would be looking at. So charitable giving is a big one, something I'm a big believer in. But the way that you would give to charity changes. And you should be, again, another episode coming for that one. But you should be structuring your finances in a way, again, as I said, tax is the biggest thing.
Well, I was thinking
so that you can
charitable giving, it's like you get a tax receipt and stuff, even like.
But the way you give is really important. So if you were going to give, I would rather, there's three parties when it comes to a charity. There's you who's giving the money, there's the charity, and there's a third one.
Government.
The CRA.
Yeah.
So there's those three in the relationship, and you get to decide how, by the way that you give, who gets what share.
Right.
Guess who I would rather get the smallest share? But you can't guess. The government. So if, as I said,
the government isn't all bad, right?
No, absolutely not. But the minimum legal taxes that you have to pay, the amount of tax that you have to pay legally, and that means planning for it. In this range, you also need a team categorically. If you're the person that you think that you're good on your own and you don't need a personal lawyer, you should be getting one. You don't need an accountant just because you can do your taxes. Again, your time is better spent somewhere else. You need a financial planner? Yes, because you cannot put the energy and time into doing it properly. A business consultant? Yes, because if you're going to try to maximize the amount of time, you want to be as efficient as possible, which means you need somebody from the outside looking in and helping you. These type of advice people come into your life a lot more in this age bracket as you try to maximize your personal earning ability. Right?
Wasn't there somebody who you said actually hired like a personal assistant who like even that?
Not business personal assistant. This was a personal. There's lots of people that do that, but somebody I knew, that hired it was an advisor, and they decided, they did the math. It made sense to hire a personal
it's like
assistant,
for
not for business, just for your
day-to-day. Because I just think about all these things that we do, and again, they're like they need to be done. There's absolutely nothing wrong with them, but it's true. Like who's like, oh, I can't wait to do my laundry. Like nobody's excited about that. And if your time is better spent, oh my goodness, if your time is better spent elsewhere, then why not? Like I feel like that's a smart move if you can do it right.
Well, I'm obviously biased, but yes, I agree. I think that it is a smarter move to offload the things that
or just like mundane things that need to get done, like that need to get done for everybody. But if you can spend your time, I mean, if you're a researcher for some rare disease, you're not going to be like, oh, sorry guys, gotta close up the shop for a few hours, I have to go fold my towels. Like that sounds crazy to me,
You're right, 100%. And that's exactly that's where your finances should be going. If you're in it, because you can now afford it. You can afford to have a cleaner, you can afford to have a gardener, you can afford to do these things, so that, because if you still have a family, pretty much you have two worlds. You have your family and your work. So if you're not working, you want to be spending it with your family.
Yeah.
Because they're the two big parts of your life. So make sure you do them, you know?
Don't regret it.
Don't regret it. So, yeah. Okay, and then the other thing was the risk part of it. And this is where the risk management comes into play. And if you are a business owner, and let's say you have this income and you have yet to insure your business from bad events, take your income and put it towards that. Like take less. So for example, let's say I run a shipping company and I don't have cybersecurity insurance.
Oh boy, yeah.
Like really go and reevaluate your risks, because protecting it is
Is worth
sometimes
it.
worth it. Often it's worth it because of the impact. And I think this is an area that people miss a lot, especially when they've grown a business themselves.
Mhm.
So a good example that I can think off the top of my head is a cleaning company. You wouldn't think cleaning companies are very profitable, but they can be very profitable.
Mhm.
Anyway, this cleaning company, it was doing about $1.5 million of revenue. Profit margin was almost 40%, like
Hmm.
owner compensation. Incredible income, great income, but they weren't insuring themselves appropriately for people getting injured.
Uh,
And
like their
so
employees kind of thing,
their
or
employees, somebody like slipping, like the just like the liability. And it's like,
right.
yes, maybe the liability coverage you had when you was a $50,000 company and things were at that point was enough. But as you expand, those type of liabilities come higher and higher, and people will, if they do get hurt, they are significantly more likely to go after a bigger company than a smaller company. So as you expand, this is a really good place for you to be putting your money. And it might take some adjustment, because I know for me, even getting additional like disability insurance and things like that was like, oh, this like it's kind of expensive. Is it worth it? But ultimately, you have to think to yourself, okay, if something does happen, it's now a lot of income to lose that maybe you was banking on for the next 10, 20 years.
Yeah. Well, I mean, that's insurance in general. It's like you're paying for the peace of mind because you don't know. I understand because it is not fun knowing if you don't use it, you lose it or whatever. But it's like, yeah, you can't, yeah, you
Get
just
over it.
can't.
You just have the money to do it and just
Yeah,
cover
just,
yourself.
yeah, for
Yeah.
sure.
And then lifestyle creep, I know I've said this in every single one of them. It still applies to this income range. There's always going to be somebody with spending more than you can. There's always going to be the bigger boat. There's always going to be the bigger house, the bigger cabin. Just as it was in prior ranges, you have to find contentment
Hmm.
in some level of consumerism. And it doesn't matter if your numbers are bigger, as long as you can truly afford it. Go get the nice car, as long as you have all the everything else in place.
Yeah.
An important thing that you have to understand though is that this at this level, this type of income is one major event away from disappearing. So making sure that your plan isn't I'll deal with that tomorrow because I have all the income. It's a case of I deal with that right now.
Can you expand on that? I'm a little lost.
You know, there's that meme going around. Actually, this will be, I think, in a month, so maybe it would have come over then. But the Coldplay concert.
Oh, with the CEO and the
Yeah,
affair.
guess what's just happened to his income, right? He was probably making well over $1 million a year, plus lots of things. How's that doing for him now?
Yeah.
You
Oh,
know,
what a
like
scandal.
not. I mean, the morality of that aside, but it's in all aspects. You're a lawyer, and suddenly there's a charge against you, and something happens, and you get disbarred.
Yeah.
Guess what? All that income's gone. You're an accountant. Something happens. Something's. It's just you're one. You're always one. Any event. You're one major thing away from it all disappearing. So just make sure that you set the foundation properly.
Yeah.
Don't put it off just because you think you can always do it later. Like
Hmm.
don't put it off. Don't just, I don't know. And I feel like I'm thinking more of um like
Doomsday?
no,
Sorry.
it's not doomsday. It's like, but I'm thinking of more professionals and stuff.
Yeah.
That you're that there's regulatory things around it, right? Like
Yeah, I do see what you're saying. It's like it to there's two sides of it. It's like that makes sense to me and I'm like a very what if person and I love to be prepared and all that stuff, but at the same time it is kind of like the sound of don't panic if you hear you're only one event away from losing it all. I don't know. That just sounds very like scary. But
Right. Hopefully,
maybe, you know, maybe that's what people need to hear. And they'll be like, oh my goodness, I need to like prepare or think
and
more about it.
and preparing can look differently. There was one person, it was a YouTuber, in fact, talking about what he did, made millions, and he found a guy, like a planner, whatever, and gave him $2 million, and basically said, because he was a gambler, and basically said, I will not touch this. I don't want, like, this is
Hide it.
hide it, basically. I don't want anything to do with it. Invest it slow, boring, because he likes to, like, he was into crypto and all this stuff, etc.
I super want to
And
know who this is, but I'm not going to ask right now.
and yeah, and it was the and that's what he did. That was his plan. Was basically, hey, this is my insurance policy against myself. Almost the reason I
Yeah.
have this money is because I'm kind of crazy. I know that about me. Take it, hide it, you know. And that was what he did. Right. That was his way of setting a foundation before, you know, because he knew that ruin could happen.
But again, you know what? I just want to point this out, of course, because I'm the psychology girl on here, is that you mentioned he knew that about himself. It's like no matter what income range you're in, if you ignore those things about yourself, like he could have very well just been like, yay, like I'm just going to pretend that, or like not have that awareness
Hmm.
and not do that because he was the one who went out and did it. Like nobody else, his planner wasn't like, hey, give me this money so that you don't go and blow it. Like he gave it to
I
them.
mean,
And
yeah, I'm
maybe he
sure.
did.
So maybe it was his parents or something. Was like,
Maybe.
hey,
But like
but
at some point he realized that to
yeah,
be true and he took steps. So of course I'm like, that's kind of where my mind is going. You have to know these things. Like I just think personal finance and behavior are so intertwined. It's like they're one and the same to me. Like who you are is directly tied to how you manage, view, feel, think about money. I think it I think it is, but anyway, sorry. Little.
no, I agree. I agree with you. I agree,
Mm.
100%. It's I think self-awareness is very, very important
Hmm.
because
Regardless of the income.
yeah,
Basically, like you said in the other one, it's like you have the system, like know yourself and how you feel about money and how what you think about money. Even like I don't know, we've talked about that in the earlier episode. I can't remember. It was like one of the first ones. We talked about like my viewpoint on money was kind of like a scarcity mindset and understanding that about myself. It doesn't mean that I necessarily have like changed that about myself, but I'm aware of it. So I recognize it and can make decisions differently to like counteract that
hmm
preference, if that makes sense. So depending on what side you're on or what you feel or think about money, you'd have to.
you can do things to balance yourself out, and
Yeah.
that's part of the reason that I assign the spending amount, right? Is because you don't want it's not all about tomorrow, you know. It's not all
Mhm.
about saving for this event. That it's like, okay, once you've taken care of that, it's important to also
Like enjoy your
enjoy
life.
it, right? And not just put everything off tomorrow. And that's why we set that amount, where it's like, this is not going into savings, this is not being invested, this is to be spent. So that's
Sometimes I still don't spend it, but I'm like, I don't know what to spend it on.
yeah. So yeah, one of those things. Anyway, last point is going to be the making mistakes with money. Because you have it, it can be very easy to ignore the small things. Really good example is going into business with people that that maybe you wouldn't have if, let's say you have $10 million and you have $1 million that you can burn, doesn't matter, won't impact your life.
Mhm.
And so your brother comes to you and says, hey, I have $1 million idea. It can be tempting to just hand it over without proper oversight.
Mhm.
And it's really, really important to still have that oversight in some capacity.
Hmm.
Even if it's not you, maybe you need to be getting your team to do it.
my question is like why, I guess. Not just why.
Because what will happen is people will end up making money pit like decisions. So let's use that example of that brother comes to you, needs money. He then takes that $1 million, goes puts it on a down payment for a really big property that you never looked at, you never did due diligence for. He then comes back to you in 6 months and says, "Hey, I don't have the cash and the roof's done." And he says, "I need 100 grand." You go, "Okay, well, here's another $100,000." Then he comes back to you and says, "Oh, yeah, the basement actually needs redone. That's another, $800,000." You're like, "Okay, well, I'll give you that." It compounds, and you have to understand that business and gifts and anything like that is all received in the individual that's receiving those things mindset. So if that individual doing that property, this is their 10th one, and they're very comfortable with it, and it's $1 million, and they're used to handling that type of money and that type of properties, they're going to deal with it significantly better than the individual that has never done it before.
Someone who's like,
and
"Hey,
maybe
I have this great idea,"
and maybe $1 million isn't a lot to you, but it's 10 times the amount of money that individual has ever seen in their life. It's through their eyes. And the same with gifts. And people can over gift very easily when you have the assets to do so. They'll buy a big house for their siblings who can't really afford the ongoing maintenance. And they will buy $20,000 watches to this person and that person, despite that being the most expensive thing that person owns. And maybe it makes you feel good, but it actually isn't a good thing for the receiving person. And people in this income can fall prey to that. And the worst case scenario is those individuals around them get entitled. And then you have a whole other issue, because then you have money that causes friction, and it's typically within family, and it's typically within families where one person in the family has done very well for themselves, and the others are still struggling. And I'm not saying not to be generous and to help and to give. I'm saying be careful of over gifting.
Or like think about how you're gifting as well, or what you're going to gift. And yeah, that makes complete sense. Again, because it's like money, not unfortunately, it just is tied to everything. It's tied to everything. And yeah, like we sometimes listen. Oh my goodness, sorry. I'm really struggling. I didn't do enough warm up before. Sometimes I say like unique New York before we start these episodes. Anyway, sometimes we listen to Dave Ramsey. Is that him?
Yeah.
Sorry. And I've heard a few people call in and say that about they've kind of been the one to earn a lot, or like, and that like they've done well for themselves, and then their family is like, "Well, you should do this for us. You need to do this for us. And it's a
really hard spot to be in.
It's really hard, because you feel like obviously they're your family. Like, just listening to those stories, I could see it being really difficult for somebody in that position. But you're right. It's like the receiver, their perception of money is important to consider.
Yeah, it's very important to consider. But yeah, that's we'll leave it there. That's really it is a little different than the other income levels, because you have a significant amount of surplus if you let that surplus happen. You can live a really good life, a really nice life, if you let it happen. If you decide to inflate your lifestyle to meet this income, just like everybody else, you'll be broke. I would rather be the individual earning a lot less with no debt than a person earning $1 million who has a negative net worth and struggling to make payments. Like, it sounds crazy. It happens all the time.
That does sound crazy.
It's I would just much rather be the individual that is happy and spending within their means and getting to treat family.
You know what they
and
say?
friends
I gotta throw in a saying: the best things in life are free, right?
Well, I don't know about that.
Okay, let me say this: it'll be more comfortable, but like you've said it before, that the things people mostly want is like freedom or to do things with their family, or like realistically those are the things you want to use your money on. So it's like,
Just make sure you have those covered.
yeah.
But anyway, that's it for this episode. The next episode is on what we do. Okay, so this is the one where we're going to look at my investments, what's in it, the philosophy behind my investing philosophy, and you are going to help us with that.
I'm really not looking forward to that one.
Okay, well, we've fallen into the trap of I just do everything pretty much when it comes to the investing piece. I've tried to get you involved a little bit more, and you kick and scream.
Yeah.
So this will be interesting. I'm excited to go through a fun fact with you.
Oh,
Fun fact.
fun fact.
Fun
Yeah.
fact. Okay, perfect. We'll see you in the next one.
Bye.
Thanks for listening to this episode of the Plain English Finance Podcast. Trey Bino, Certified Financial Planner, Chartered Investment Manager, is a financial planner with TC Wealth Management and Aviso Wealth. You should always consult with your financial, legal, and tax advisors before making changes. This podcast is provided as a general source of information and should not be considered personal investment advice or solicitation to buy or sell any securities. The views expressed are those of the individual and are not necessarily those of Aviso Financial Inc. Mutual funds and other securities offered through Aviso Wealth, a division of Aviso Financial Inc.